Here are the crypto top headlines covered in this video. Ripple invokes SEC versus Terraform case, argues for smaller civil penalty. Next, why tokenized real-world assets are soaring. Also, Ether notches second biggest hodler buying day in history. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which would be our channel's 1-year anniversary. All we ask is that you click on the like and subscribe buttons as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Ripple invokes SEC versus Terraform case, argues for smaller civil penalty. The blockchain firm's case with the SEC has been ongoing since December 2020, when the regulator alleged Ripple used XRP as an unregistered security to raise funds. Lawyers for blockchain firm Ripple have asked a court to consider an appropriate civil penalty in its case against the United States Securities and Exchange Commission following a settlement between the regulator and Terraform Labs. In a June 13th filing in the U.S. District Court for the Southern District of New York, Ripple's legal team submitted a notice of supplemental authority alleging the unreasonableness of the SEC's civil penalty, citing a settlement in the Terraform case. Before the Ripple's filing, a federal judge approved a $4.5 billion deal between the SEC and Terraform Labs and its co-founder Do Kwon. The SEC has requested that Ripple pay roughly $2 billion in disgorgement, prejudgment interest, and civil penalties, while the blockchain firm has argued for no more than a $10 million penalty. Ripple lawyers made similar arguments in penalties imposed in the SEC's respective cases against Block.one, Genesis Global Capital, and Telegram, but the filing redacted information regarding the firm's gross revenue. As Ripple's opposition explained, in comparable and even in more egregious cases, the SEC has agreed to civil penalties ranging from 0.6% to 1.8% of the defendant's gross revenues, said lawyers for Ripple. Terraform fits that pattern. Here, by contrast, the SEC seeks a civil penalty far exceeding that range, even though there are no allegations of fraud in this case, and institutional buyers did not suffer substantial losses. Terraform thus confirms that the court should reject the SEC's disproportionate and unprecedented request and that an appropriate civil penalty would be no more than $10 million. One of crypto's longest legal battles. After a 2-week trial in April, a jury found Kwon and Terraform liable for fraud. In contrast, Ripple's case with the SEC has been ongoing since December 2020, when the regulator alleged the blockchain company used XRP as an unregistered security to raise funds. The case led to a significant legal precedent when, in July 2023, Judge Analisa Torres ruled the XRP token was not a security regarding programmatic sales on exchanges. The SEC moved to dismiss its case against Ripple CEO Brad Garlinghouse and Executive Chair Chris Larsen in October 2023, saying at the time it planned to discuss remedies with the blockchain firm. Judge Torres had initially scheduled the trial between Ripple and the SEC to begin in April, but in October 2023 adjourned the proceeding with no appointed date for resumption. It's unclear when the judge could set a date for the trial at the time of publication. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, why tokenized real-world assets are soaring. Tokenized real-world assets have surged to a capitalization of $8 billion, outpacing Bitcoin and Ether in both market performance and volatility-adjusted returns. The real-world assets, or RWA market, has grown to $8 billion in total value locked, or TVL, this year, excluding non-yield earning stablecoins. Real-world assets currently tokenized on blockchains include private equity, real estate, government securities, commodities, and other financial obligations. The popularity of tokenized RWAs in decentralized finance, or DeFi, started to grow as bond yields in traditional finance eclipsed low-risk DeFi yields during the bear market of 2022 to 2023. The United States Federal Reserve's aggressive interest rate hikes made U.S. Treasury yields competitive with DeFi stablecoin yields despite their much lower risk. As of June 13th, the one-year Treasury bill offers a 3-month average yield of 5% to 5.24%, while AVE has variable annual percentage returns on stablecoins that range from 3.73% to 7.46%. Real-world asset projects hit $8 billion market cap. Several protocols started to capitalize on higher borrowing costs and subdued DeFi activity by offering tokenized U.S. Treasuries and tokenized private loans in blockchain ecosystems. In early June, the average annual percentage yield for such tokenized private loans was 9.57%. As the crypto market recovered with new institutional activity in 2024, the TVL of RWA projects reached their current $8 billion capitalization. Asset management giant BlackRock has entered the space and quickly became the largest provider of tokenized U.S. Treasuries with its BUIDL fund. Upon launch, it instantly gained a market cap of $180 million and has now reached $462.27 million. At 30% market share, it is the largest issuer of tokenized treasuries, surpassing Franklin Templeton's Benji Investments Fund, which had been leading for a long time. However, the growth of the RWA market is evident not only in TVL, but also in the token performance of related projects. In May, RWA tokens gained 55.2% and rose 224.57% year-to-date. The tokens contributing most to this impressive number include TrueFi, Ondo, Dusk, Clearpool, and TokenFi. To evaluate the risk-adjusted year-to-date performance of RWA tokens, Cointelegraph Research calculated their daily Sharpe ratios, a measure of excess return per unit of risk. Using the daily returns from January 1st to May 31st, the Sharpe ratios for RWA tokens were as follows: Ondo 4.78, TokenFi 2.66, TrueFi 1.88, Dusk 1.4, Clearpool 0.4. For comparison, the Sharpe ratios for Bitcoin and Ether were 1.37 and 1.36 respectively. Calculating returns of RWA tokens. These ratios were calculated using a risk-free rate derived from the daily annual yield of a one-year Treasury bill. Except for Clearpool, all the tokens had a higher risk-adjusted return compared to a BTC to ETH portfolio, which had an average Sharpe ratio of 1.37 over the same period. The higher Sharpe ratio for the RWA tokens suggests that they have been offering a better balance of return and risk for short-term long trades. Unsurprisingly, they have also outperformed a BTC to ETH portfolio in terms of raw price performance, with the exception of Clearpool. Ondo Finance delivers highest returns. Ondo Finance has delivered the highest returns with a year-to-date gain of 461.62% and the strongest Sharpe ratio at 4.776. This performance can be attributed to the launch of new products on its platform, including the U.S. Government Bond Fund, or OUSG, a tokenized derivative of BlackRock's U.S. Treasury ETF, which consists of short-term U.S. Treasuries. Ondo also expanded to the Solana blockchain and introduced instant investments and redemptions. As of June 13th, Ondo has become the third largest issuer of tokenized U.S. Treasuries. Our next top headline: Ether notches second biggest hodler buy-in day in history. Demand for Ether from long-term holders rocketed on June 12th as the price fell below $3,500 just before the SEC's Gary Gensler gave a forecast for spot Ether ETF approval. Ether has just notched one of its biggest days in long-term holder accumulation, seemingly taking advantage of a 2% price drop over 24 hours. Ethereum demand has spiked. Buy-in by permanent holders was the second highest on record yesterday. CryptoQuant head of research, Julio Moreno, wrote in a June 13th X post. Moreno highlighted that 298,000 Ether tokens were acquired by accumulation addresses over 24 hours on June 12th, equivalent to roughly $1.34 billion at the time of publication. The amount acquired was only 6% lower than the record on September 11th, 2023, when long-term holders bought 317,000 Ether as the price fell below $1,600. The increase in demand comes amid Ether's 8.49% price decline over the past 7 days. Initially falling below $3,800 on June 8th, it failed to bounce back but has remained above $3,400 across the period, according to CoinMarketCap data. At the time of writing, Ether is trading at $3,472. Past price action has indicated that the area around $3,500 represents a stubborn resistance for ETH bulls, Cointelegraph reported on June 11th. It was also noted that it might not be the end of the downside, citing a similar drop below $3,500 on April 11th, which led to a 25% decline, reaching a low of $2,814 by May 2nd. Meanwhile, the chair of the United States Securities and Exchange Commission has hinted that spot Ether exchange-traded funds could see final approval for trading before the end of September. On June 13th, Cointelegraph reported that the SEC Chair Gary Gensler forecasted to lawmakers during a Senate Banking Committee hearing that the regulator could sign off on the final approvals for listing and trading shares of spot Ether ETFs within 3 months. On May 23rd, the SEC granted preliminary regulatory approval for spot Ether ETFs in the U.S. by approving 19B-4 filings from 8 applicants. However, trading can only commence once the S1 registration statements are also approved. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.